Hello everyone, my name is Sunday. I welcome you all to Igeinsfx. Yes, today we are going to be treating a topic I titled Support and Resistance Strategy. My last video, I thought about um, SMC strategy. And we have dealt with part one, part two, and part three. So I said the last video was going to be all for SMC as a strategy. Now, we have different types of strategy in Forex market. So I'm going to be teaching you guys about maybe two, three strategies so that you go test them out, and anyone you know that resonate with you that you like to trade after testing them out, you can now stick to one. All right. All the strategy works perfectly. As far as you are a trader, you know how to analyze the market, or rather the pair that you choose to trade, and you have a particular strategy. All you need to do is stick to that strategy. And as you do, you will see yourself being profitable. But one thing you must note is that when you want to start your analysis at any time, you want to start your analysis before making a trading decision, go to the higher time frame to start your analysis. Do your top-down analysis. We call it top-down analysis, meaning that you are starting from the higher time frame to start your analysis. Analyze the pair, all right, from the monthly, scale down to the weekly, daily, then 4 hour, not don't go below 1 hour, please, for your time frame of execution where you will now place your trade. But please, if you want to be profitable, if you don't want maybe what you have gotten from the market, and at the end of the day, you now give it back to the market, please stick to the higher time frame. Well, you might not have opportunity to trade every day, but I bet you any trade, any setup that forms on the higher time frame, let's say from 4 hours, all right, or daily, if you take that trade, you will be okay. Run away from noise. Lower time frame with noise, and is easily manipulated, meaning that the movers of the market, people with big bags of money, when they want to place their order, what they will do is they will first of all push, if they are to go long, they will first of all push the price down to enable them key in their order. So as they are doing that, people on the lower time frame will be stopped out because it's less expensive to manipulate price on the lower time frame, breaking support and resistance on the lower time frame. But on the higher time frame, is more expensive. All right. So when we say stick to higher time frame, most especially you are beginners. If you're a newbie, you are just coming into the system, please don't get yourself involved in trading from 5 minutes, 15 minutes, 3 minutes, 1 minute, please. All right. I am not saying people don't make money trading uh, on 15 minutes. No, but you have to be very, very smart. You have to be very, very experienced. And apart from that, there's too much of a noise on the lower time frame. That's why we always I tell people, if you want to really make cool money and rest your head while trading, go to the higher time frame. Yes, go to the higher time frame. Maybe in a week you might take just one trade or two. And on a higher time frame, you learn to hold your trade. You learn to hold your trade. Once you have identified levels from the higher time frame, place your trade maybe on the 4 hours, just like as I do. I place my trade on 4 hours. I leave my trade to run. All right? I leave my trade to run. That is how it is. You even rest. You won't have time to be looking at your chart every time. All right. So that being said, if you are new, please subscribe to my channel. My channel's name is Igeinsfx. All right. And if you have been following us on this crash course that we are offering free of charge this month, crash course, that means if you have been following us up to this point and you have not subscribed, please do subscribe. It's free. Go to YouTube, type Against FX, all right? Then you just click subscribe and you activate the bell sign, all right? You activate the bell sign. All right, so this is it. The YouTube name Against FX. All right, Against FX. So you just type Against FX, then you subscribe. Once you have done the subscription, you just but a click. So it does not really take time. Just a click, then you activate the best. And once you have done that, if you want to now see all the videos we'll be releasing since we started this crash course or program, free of charge, you just go to um, beginners free course. Beginners free course. That is the playlist. Click on that, you see massive materials there that you watch. Endeavor to watch any video you start, endeavor to watch the whole video. Because if you skip anything, maybe you just watch a little and all that, you might not get the real message. So please ensure that you watch every video that is in there. And most importantly, subscribe to the channel. All right. So that is what is required of you, just to subscribe. That being said, let us start this support and resistance strategy. All right. As you can see, this is the monthly time frame. All right. This is the monthly time frame. Let me remove this so that we can start on a fresh slate. All right. So first, what you notice here is that we've been going down. It's been pushing to the downside. All right. This is a trend line for you to know that it's been pushing to the downside. And the outer trend line, you plot it from here. All right, you see This second one also has already been broken, but we must understand that this there is a resistance here, a support level that now turned to a resistance. A support level, it was a support level, but now a resistance. All right? It was a support level, but now a resistance level. So when you look at this very well, this was the last break of structure to the downside. All right? I'm teaching you guys how you analyze it before you start marking your support and resistance, because you must know where the trend is headed. That is very, very key and important. All right, so we don't want to go through all those ones. You already know that the trend is down. All right, if you want to follow the main trend, this is the break of structure from the higher time frame. Those ones here are from the lower time frame, like daily and weekly. So let's just take this. This was the last break of structure. All right. Now, when price now pull to the downside, created this low, price created this low, right? Then you now see a push to the upside, a push to the upside instead of price breaking, because it has pushed to the upside and it created a resistance here. All right, it created a resistance here. Instead of price, now the next thing, the other flow, what price was supposed to do was to push to the downside and create another lower low, which it then failed to do. As a result, what now happened? It pulled to the downside, it pushed to the downside, and it now gave us a lower high. It gave us a lower high. All right. It now gave us a lower high. Now this is the lowest, the lower low. Now this is a lower high. So what now happened? Price now broke this resistance here. All right. This last resistance was broken. And what we'll now say is that this internally will now say market shifts from here. We now say market shift. And anytime market shift is experienced, we now say, okay, it's now time for price to start pushing to the upside. That means the bearish move has gradually ended and the bullish move is about to start. You can see has broken this trend line to the upside, and this second trend line is also broken. I'm just showing you, I'm not a fan of trend line, just to let you know uh, how I don't like rubbishing my chart. I like my chart being neat and clean. All right. So what we are analyzing right now, and the strategy we need to apply here is support and resistance. All right, support and resistance. So before you can even say you want to now trade that as a strategy, you need to know how to mark your structure. All right, you need to know how to mark your structure. Now, this is the last break of structure to the downside, and this level is a support level where we have the lowest low of price. All right, now we now have another leg, a lower high. This is a lower low, and this is a lower high. All right. So at this point, this push here gave us a market shift. Now, don't forget that there is a support level here. Why is it a support level? Price came here, bounced, came again, bounced, it came again, and it bounced the third time. So it's a strong zone. So what now happened? When price pushed to this side, it now broke it. Now, when it retraced again, it respected it and created a resistance here. Then we immediately got a bounce. All right. It went again, it bounced. All right. This push now gave us a lower low. Now price came here, it stopped here, respected this level, then price came down to this level and created a lower high. So what we should be expecting right now is for price, now that he has broken this a resistance, that this last resistance, we are expecting price either to break above this level or to get to this level and come back to give us another, and to come back to give us a new low. Now, once there's a fail to create, what happens? A fail to create will always be used as a liquidity. That was what happened. This guy failed to create a low. Now, this push now went up, taking this buy side liquidity, all right, it now push the price to the upside. As far as I'm concerned, this very point here has given us a market shift. It's a sign that the price is rallying to the upside. So at this point, we have already marked this level, all right, because it's a strong resistance level. A strong resistance level because this point here, it's a support level that has now turned to become a resistance level. All right, so when this push get to this point, because that is where it's headed, once it gets here, let's see what will happen. If it breaks, we know that, okay, we are good to go. Once it breaks, you know that we are good to go. So what will happen? We need to now take a step further. All right, now that we have marked our levels here, let's remove this. Let's remove this one as well. We have marked our level, the last break of structure, last low, the lower high, then market shift, then a resistance level is marked. All right. Now, what we need to now do next is for us to, okay, we are going to mark this place because this is the high here, the high where this move originated from. So we have identified all the levels, then we now need to, well, after this move from here, that means it will stop here, from here to this point. All right, so that is just the break. We don't need to start marking them here now because we need this price to either taking out this high, once price is able to break this high, take out this resistance, let price come retest, then we now know that, okay, it's going to push to the upside. And it's a very massive, here, there are a lot of money to be made here once there's a breakout from here, guys. So this is now the time for us to now scale down to a weekly time frame. Now we are now on a weekly time frame. All right, you can see our level. Everything is beautiful, very neat and all that. So all we need to do right now is to now look at the weekly. All right, so there is really nothing to mark here because we have already marked this thing from the higher time frame, which is the monthly. All right, which is the monthly. So if we break above this, the next level is this. Remember, anywhere you have a resistance level, that is where sellers will wait for price. And soon as price gets to that level, they will try as much as possible to push the price down. But once if they fail, meaning that buyers are more than the seller, it will push them away. Therefore, taking what we call buy side liquidity. All right, buy side liquidity. Let me put this point. There's a buy side liquidity here. This is a resistance where sellers stay. Then we say buy side liquidity. All right, buy side liquidity. This point is where sellers will wait for price. All right, sellers will wait for price here. All right, and even here, sellers will wait for price here because they are waiting to push the price down. So this is a buy side liquidity. So at the resistance level, we have buy side liquidity. Then at a support level, we have sell side liquidity. So now what we need to, how do we now trade? How do we now apply support and resistance level? Now, if you want to, as the market is bullish, is getting ready to be bullish, what we should be looking for is the opportunity to buy. Is the opportunity to buy. All right? Is the opportunity to buy. Where are we buying from? We are buying from a support level. We want to make sure we buy from a support level. At this point, this is the daily time frame. Now, if you want to now read the structure of the daily time frame, you will now discover that there is a break of structure here. This is a daily time frame, all right? There's a break of structure here, and there is a break of structure here. All right, so now this is a pullback. Price created a support here. All right, okay. This is a support level. This also is a support level, and also we have a support level here. So now what we need to now do is price has created this already and is already moving, dishing out buy. All right, price came like this. It found a support here. That means sellers and buyers, I beg your pardon. That means buyers are here. When we say buyers are here, we are simply saying that there are orders here to buy. So many orders are here. So they waited as price pull back to this level. After breaking this structure to the upside, price now pull back to this level, and it now the price now pull back to this level, and this level is holding right now. And another way for you to know where the price got to before you start pushing back, you use your Fibonacci retracement tool, which I always recommend for people, and I've already made video about it. I've already treated that topic. You know, before you can use Fibonacci retracement tool, there has to be two range from the low to the high. All right, price range. All right, price range. From the low, which is here, you put, because it's bullish, you put your 100% here, then you now drag it, and the high, you put the 0.0%. Now, this high is where price now turned and started making a pullback. If there's no pullback yet, you cannot apply Fibonacci retracement tool, because there has to be a range of price from the low to the high before price will now start pulling back. Now, if you look at it, where price pull back to is what? Price pull back to 50%. All right, 50%. It pulled into what we call a discount level. Remember, I treated this topic and I told you guys from 50% to the upside to 0.00% is what we regard as what? A premium level. Then from 50% below to 100% is a discount level. All right. So all this level, once price get to this level, 23.60, all right, if it did not hold, if this level did not hold, if it did not hold as a support, it will break. Once it breaks below it, then the next level is 38.20%. If 38.20%, which is also a minor pullback, not major, if it did not hold price, that means the next level will be 50%. All right. If 50% still did not hold, if it breaks below it, the next level will be 61.8%. So it's like that. So as price is pulling back, price has no business breaking below this 100%. If it does, that means a market shift or change of character has happened, because at that point, price has violated the order flow. The order flow is that as price creates a high, the next thing it's supposed to do is to pull back, all right? And that pullback should not violate the support level. Once the support level is violated and we're on an uptrend or bullish market, that means there is what we call market shift or change of character. I hope I've made myself very, very clear. So right now, we can now see with this application of Fibonacci retracement tool, we can now see that it's obvious that price has already pulled back into a discount level. So now it's a good price for you to now buy from here, as price is gradually making its way to the upside. So that is how to use Fibonacci retracement tool to now time the pullback. So the pullback has given us this level. After the time we are doing this analysis and treating this topic, price has already started pushing to the upside. So right now, we are looking at price breaking this level. All right, breaking this level. Neckline. There's a neckline here. Price needs to break it. Then, after breaking it, we want price to pull to the upside. All right. Then this level here, guys, remember this level, it's a very strong resistance level, and we want price to take this buy side liquidity. Once price takes this buy side liquidity from this point, once trading is patience, you need to wear garment of patience. Because you see price rallying does not mean you should jump in. Jumping in from here is late because price has already started pushing. And what is the movement now? How many pips gone? You can see about 389 pips. All right, so it has already started pushing to the upside. You can see. All right, now we need price to push, clearing this place, using this place as liquidity to facilitate the movement to the upside. And I know that price is headed to this point. The only reason we'll be able to get involved in this now as a support and resistance trader, if that is the strategy we want to apply right here, is after this breakout, push to the upside, then if we see any pullback, to this level, then we can now buy because we know that price is pushing. This is the level is targeting. All right. So this is how it is. Price will move. Want price to push out, break this neckline. All right. Break this neckline. All right. Now, after that, if there's a pullback, once it pulls back, because you can break this length now and just fly like that, start pushing until it gets to this level. All right, this is where the real reaction we are expecting because price has tested this level, bounce, tested that level, bounce, tested that level, bounce several times. All right, so we are expecting price to either get to somewhere here after pushing a little up to this place, breaking this neckline, then we're expecting price to pull back. If there's a good pullback, then it will now create a support level that will now give us an entry to now join the movement to this level. Because as it's pushing, change of character has happened, and price is pushing to the upside, the level is here. The target is here. The price is coming to this level. When will the price get there? That is what we don't know. As a trader, you will never know. So it can take 1 day, 2 days, 3 days, 1 week, we don't know. But once it gives us an entry, all right, once it gives us an entry, what is the entry? Break this neckline, make a rally up, then pull back. A good pullback. All right, not just one opposite candle, at least 2, 3 opposite candle. Once there's a pullback, then we can now, once the pullback will create a support. Once that support is created, we can now enter. Once the pullback is finished, we can now enter to join the push to the upside. Remember, once this push to the upside is exhausted, then we can now take our fib and measure from here to the top. All right, this swing low to the swing high. Then we can now see price will need to pull back to a discount level. Once we see that pull back to a discount level, and there is a hesitation, and price holds at a particular level after It has pulled back into a discount level. Then we will now enter. Then our target should be this resistance level because this is where sellers are waiting for price. So it's very simple. As a matter of fact, support and resistance level, once you mark your structure from the higher time frame, all you need to do is for you to wait for price to pull back. Once price is rallying, you open your chart and price is rallying. Rallying simply means that price is making push to the upside, all right? Creates support level, push to the upside. Once it's like this, all you need to do, once you see price, it has created a high, there's a resistance. Once it has created a high, you now notice, okay, it has started pushing to the downside. All you need to do, this is point A and this is point B. The lower swing, the higher swing. This is the range. Bring out your fib tool, mark it from the downside, put it at the top, this reversal point. Remember, this 25, negative 25, you don't know how to use it. It's just for you to time your take profit, all right? Take profit. But let me remove it so that it won't get you people confused. So all you need to do from point A, which is the low, the swing low to the swing high. That is the range of the price. Put your 100% and 0.0% at the swing high. Then drag it to your right. All right? Drag it to your right. As simple as that. Now, what will you be waiting for? You'll be waiting for price to now pull back. As it's coming like this, you have to change character before you start pushing down. It's normal. Like this, you now start pushing down, and you want to make sure price pull below 50%. You want to make sure price push below 50%. Or at most, let price touch this 50%. That is the real pullback that is healthy. Once you see a pullback that push into a discount level, and you now see a hesitation and price wants to start going up, full margin. I'm telling you, full margin. By the time you now see a rejection, then an engulfing candle takes off, but you must wait. Let the pull, once the pullback has ended, the last candle, all right, once a bullish candle appears, let that bullish candle engulf the previous candle. What do I mean? We now see price started pushing back to this point, and finally this level now holds. All right, this level now holds. Then we have a white candle, which is a bearish candle. Then we now have a blue candle, which is a bullish candle. This bullish candle did not engulf this. You have to make sure this push to the upside, we have candle that is higher than this candle that is facing down. That is what I meant. At this point here, you don't need to enter yet until you see any candle that is above. Once you see a bullish candle above this level, you can now enter. Yes, you can now enter. But this first bullish candle where it stopped here, it did not even engulf this. It's not valid. But it's a sign that buyers are already in the market, but you have to be patient. You see, after this, price now pushed to the upside. You see, there was a rejection. All right, it now even closed below where this is where the price. It now closed here. It now range a little after this one, before buyers now enter the market fully, they now took control. Push, pull back, they now started pushing to the upside. So you have to wait until you see an opposite candle above the high of the previous candle. All right, above the high of the bearish candle. All right, that is when you now know, okay, it's time for me to get involved in the market. You now place your order. Don't just say because you see price got to this point and it now stopped. You just see a bullish candle. Because it's a bullish candle, it's just jumping. No. This one can just appear, and again, the next candle you see now start coming down. Before you know it, it will stop you out. You are not patient. All right? You are not patient. You need to wait until everything, you now see that, okay, there are no sellers in the market anymore. Buyers, they have taken over. How? You now see bullish candle, bullish candle, bullish candle. There are no sellers. So by the time you now see that the bullish candle closed above the high of this bearish candle, this swing low candle, then you know, okay, the market is now ready to buy. So it's like that. You need to wear garment of patience, and you need to be patient for your trade or setup to get materialized on the higher time frame, not lower time frame. Take quality trades, even if it's one trade in a week. You don't say, okay, this week I'm going to trade, maybe place 100 trades, no, or 50. No, one trade is okay. At most two, if there's a setup. All right, so this is practically how you trade support and resistance. This is a support one now that, okay, we are going to the upside. Then the resistance, you want to know how to trade resistance, as simple as that. Opposite, you just flip it. Now you just say, okay, this is push to the downside, pull back. Push to the downside, breaking structure, pull back. Push to the downside, breaking structure, then pull back. All right, push to the downside, breaking structure. All you now need to do right now, once this happens, you just take your fib from this high. Now let me, from this side, this is where, this is the resistance, and this point here is now the support. This is the range now. This is the range. All right. So this is where sellers wait for price. This is where buyers wait for price. So because the market is bearish, you have done your analysis and you see the market is bearish. Why is it bearish? Breaking structure to the downside. Break of structure. All right. Is breaking structure to the downside. Let's clone this. Breaking structure to the downside. And once you see a characteristics like this, you know that this is a bearish trend. All right. If you have not watched my video on how to restructure or type of market, please Go there, go and dig out the playlist, beginners free course. Go to my YouTube channel and dig out the playlist, beginners free course. You will see there. You see there so that you learn how to read market structure. You see, break of structure, break of structure, break of structure is breaking structure to the downside. Anytime it breaks structure to the downside, the next, once it breaks structure to the downside, that means a sell side liquidity has been taken. The next thing you will see, price will pull back, creating a resistance. Once a resistance is created, people are here, all right, following this trend that is going up, all right, and their stop losses are here, their entry and all that, pending on that. Then once it gets here, all right, because those who don't know that this is a bearish trend, because it's breaking structure to the downside, once they enter from here, they feel they will just stay dead forever, that the trend is going up, not knowing that in trading, there's what we call push phase and a pullback phase, retracement phase. A push, a rally, then a retracement phase. A moment of cool off. Price cannot just start coming down on a straight line. And also price cannot just start going up on a straight line. It will take price to the downside, create price, all right? Buyers will push it back a little to create a resistance. Sellers, because they are in control, they have to push again to the downside, giving us a new lower price. It's like that. So once a support is created, the next order flow, price will have to move back to create a resistance. And that resistance, meaning that price will have to stop before this level. He has no business violating or taking out this high. Once you see that the trend is bearish and price now push, taking out like this, price going above this level, that means this will now be regarded as a market shift or change of character. It has violated the order flow. As simple as that. You just mark change of character or you write market shift. Then wait for price to pull back, break structure. Because this is not a break of structure. It just gave you a hint that the trend is about to shift. All right. So once you're on a bearish trend and a resistance is violated, just know that that is a market shift. And once you're on a bullish trend, all right, a support is violated, just know that it's a market shift. The market is trying to shift from the bullish state to a bearish state. If it's bearish at this moment, I now see a resistance level is violated, just know that the market is about to shift from a bearish state to a bullish state. I've repeated this thing time without number, but the idea is I want you guys to really understand it. All right, I want you guys to really understand it. And the support and resistance that are really valid and strong, they are from the higher time frame, not the lower time frame. Understand it and know peace. All right. So when you now want to, in a bearish market, or in a bearish market, the opportunity that lies on a bearish market is for you to sell. All right. Is for you to sell. Is selling, excuse me, is selling opportunity. And how do you position for your sell? You wait for price to create a low. All right, breaking structure to the downside. Once price breaks structure to the downside, then the next push is for price to create a resistance. Once a price has created a resistance, it should go and create a support by taking price below the previous low. Then we are here. Once price has given us a new low, now this price now we have to pull back to give us a resistance again. Now there is this level now, all right? Price will now push again to give us a new low. Now we are here. Let me remove this. What is the price range here? The price range is between here and here. And this is a resistance level, and this is the support level. What we should be expecting immediately, we see that the price has given us a new low, then what we should be expecting is for price to start pushing to the downside, right? For price to start pushing to the downside. What do we need to do then? Bring out our fib, start the plot from the top, which is the resistance level, to the support level. You know, when it's bullish, you start from the support level to the resistance level. When it's bearish, you will start from the resistance level to the support level. You know, you reverse it. All right, it's just all is opposite. It's not difficult. You guys shouldn't be confused. It's not difficult. All right. Now, this is the range. All right, this is the range from here to here. And what should we be expecting? We should be expecting a pullback into a premium level. As simple as that. We should be expecting a pullback into a premium level. A healthy pullback should always push into a premium level. And once you see price push into a premium level, then you now see that there's a reaction. Reaction is saying that the price, you now see that it's resisting price to push above this level. You'll see a rejection, then an opposite candle will appear. Once the opposite candle appears and is pushing to the downside, the candle that got rejected, make sure, like I showed you, make sure this candle now that is now pushing to the downside engulfed that, engulfed the previous candle. If the opposite candle has not engulfed it, just know that the price is not ready yet. Another candle will come out, wait. Once the candle now engulfed the two candles, yes, and it's bearish, then you can now enter the market to push the price down. Where will be your target? Your target should be this previous low. All right? We know that price will come and give us another low, but your target, for you to know peace, target this previous low. As simple as that. That is your target. Once you have hit your target, you wait. And price will give us another low. And once price gives us another low, lower price breaking structure to the downside, giving us another low. Once it start coming down, what you need to do again, carry your Fibonacci retracement tool. Carry your Fibonacci retracement tool. Where is it now? Carry your Fibonacci retracement tool. This is it. The range now from here to here. You wait for price to push into this premium level. Then once you see a hesitation, you enter. Target this level. As simple as that. That is how to trade support and resistance level. That is just how to trade support and resistance level. And if you now notice that, okay, you now have the heart to hold trade. Because you have done your analysis and you know that, okay, this market, this thing is going down. Let's say, for example, this is going down. You know that it's going down, all right? You just plot like this. Plot like this from here. This is the high and this is the low. Price push into this level. Can you not see it? Push into this level, a premium level. As simple as that. You push into a premium level. Look at it. It's very clear. Push into a premium level. And you see when the price is going back from here, look at it. The bullish candle stopped before this bearish candle. And you can now see that this bearish candle has engulfed this bullish candle. That is what I'm trying to explain. Make sure this bearish candle engulf this bearish candle. And make sure this bearish candle engulfed this bullish candle. All right. Once it closed and you see another bearish candle, then you enter. Okay, because you know that, okay, from here like this, after breaking of structure, price will give us another low. The next thing is should pull back. If you see the way it is, you can continue to hold, all right? Continue to hold to this downside. That is how it is until you now see price changing character. How do you know that price is changing character? Push, create a resistance, all right? But instead of price to now pull back, instead of price to now give you a low, you fail to give a low, then it now creates a lower high. All right, instead of price to create a lower low like this, instead of price after this low, price pull back, instead of price to give us a lower low, it did not. It now creates a lower high. All right, a higher low. It now creates a higher low. Then the next point, you now push, breaking this level. That is a violation, market shift. You pull back, creates a higher low again, breaking structure to the upside. So you just know that, okay, once you see something like this, just take your profit. You are done. Take your profit and you wait. Once you see a break of structure, because this first move is a market shift, then this break of structure, you can now enter and start following the trend to the upside. I think is very simple. Support and resistance, simple, and it works perfectly. If you know how to use Fibonacci retracement tool, I'm telling you, you will just be targeting it. Once it creates, it gives you a range, swing lows to swing high, plot your Fibonacci retracement tool, wait for price to come back to return into a discount level. That is, if it's bullish, if it's bearish, wait for price to return into a premium level. In some cases, as a professional trader, if you have, stayed very long time in trading, when you see that, okay, you have marked your swing high and swing low, and price did not return into a premium level or a discount level, you don't even need to take the trade. Some instance, you don't take the trade. This is not a real pullback. You want a healthy pullback. All right. Once you have attained that level, for you to say, okay, even if it's going, after that, maybe it stopped, then it start going, dishing out pips. You don't even care, but you are waiting for a healthy pullback so that you can take a quality trade. All right. Once you do know all those things, and you've been able to, you've worked on your emotions, you don't say, okay, oh, is bullish. Look at pips. I'm missing. No, you don't need to miss. There are opportunities every day. All right, there are opportunities in the market every day. The only thing you need to do is position for the quality ones, not quantity. Quality ones, guys. So thank you so much. At this point, I wish you guys best of luck as you continue to learn. So please share this video, all right? Share it to someone that you love, okay? Share it so that people who are looking for an opportunity to become a forex trader so that they can also be part or partake in this free training. Like I promised you guys, it's going to last for a whole month. All right. With that, I believe you would have started trading. All right. If you have not downloaded your MetaTrader 5 or your Trading View, please do that. Just go to tradingview.com, download the application, just create an account, and any broker of your choice, you link your account. That is your demo account. All right, so I am not promoting any broker. I don't need all those rubbish. So choose any one of your choice that you like, or anyone that you feel you like. If you look at, there are so many. All right, there are so many. So choose any one of your choice. All right, choose any one of your choice and create account, open account with them so that uh, you can link your trading view to them with them, and they will give you a demo account. All right. So the difference between demo account and a real account is that you cannot withdraw the money that is there. All right. They just give you that so that you can use it to practice based on what you have learned. Then, if you are now comfortable with your strategy, you can now create a live account. From there, you create a live account, then you can now, just like going to the bank and create a saving and opening a saving account. So you can now create an account, put your own money in there, then you start trading with it. Gradually, you start growing your money. Don't be greedy. Don't feel, oh, I want to flip 500 to 1,000 one day. No, just go gradually. Take things easy. And as you go, you are learning. As you practice, you are learning. As you are trading, you are gaining more knowledge. So the money aspect will be a byproduct once you are able to acquire the skill. It's the skill first. All right, this is skill first. Then the money aspect will just come. So thank you so much, and I'll see you guys on the next episode.